Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 11th of September 2020. I am still expecting that oil has found a major sustainable low and it's in the early stages of its first multi-week pullback. Well, for this particular market, its first big correction in a new trend is usually quite deep. My target is 23.05, but if that's wrong, it may not be low enough. I've had the same Elliott Wave count for a long time, and now it expects that this downward movement here is a complete Elliott Wave corrective structure. This is a double zigzag, and it's a second wave position. This degree is supercycle. The double zigzag is the first zigzag complete here, labelled cycle wave W, A, B, C. The double is joined by a 3 in the opposite direction, labelled cycle X, which also subdivides as a zigzag, and that's the most common structure for X waves within double zigzags, labelled primary A, B, C. And here's the complete second zigzag in the double, labelled primary A, B, C, for cycle Y, to complete the double zigzag for supercycle wave 2. The simplest Elliott wave structure is a 5-step pattern. Here's an example for a bear market: 1, 2, 3, 4, 5. This is an impulse. I expect that this very simple structure is unfolding at a larger degree, at supercycle degree, in a bull market with 1 complete here and a huge 2, and now a really big third wave in its very early stages. The third wave must move beyond the end of the first wave, and it has to move far enough beyond the end of the first wave to allow room for a subsequent fourth wave to unfold and remain above first wave price territory. The third wave may only subdivide as an impulse. Let's take a look at how that might look at the weekly chart level, where this low down here is this point down here, and so supercycle 3 must subdivide as a 5-wave impulse at cycle degree. So far we may have 1 complete, and 2 may be in its early stages, and then 3, 4 and 5 need to unfold. 3 needs to move beyond the end of 1, and 4 needs to move lower but not overlap into wave 1 price territory, and then finally 5 should move beyond the end of 3 to avoid a truncation. 2 may not move beyond the start of 1 below the invalidation point. Let's take a look at this at the daily chart level, where this low down here is this point down here. From this low to this high, cycle wave 1 subdivides as a 5-wave impulse at primary degree. This is the simplest Elliott wave structure: 1, 2, 3, 4, 5, and the third wave itself subdivides as an impulse: 1, 2, 3, 4, 5, and the middle of it, intermediate 3, also subdivides as an impulse, as it must. Primary wave 5 is an ending contracting diagonal: 1, 2, 3, 4, 5. If cycle wave 1 is over there, then cycle wave 2 may reasonably be expected to last weeks, if not months. It may reasonably be expected to reach about the 0.618 Fibonacci ratio, possibly lower, and it may not move beyond the start of cycle wave 1. It would most likely subdivide as a zigzag. That's the most common Elliott wave corrective structure for a second wave, and they are labelled A, B, C, and they subdivide 5, 3, 5. So far within primary A, a 5 down. The first 5 down of this new trend may be complete down here. It's labelled intermediate wave 1. We could see a little bounce next week for intermediate wave 2, which may not move beyond the start of wave 1. When that's complete, a third wave down must move beyond the end of 1, and then a fourth wave must unfold and may not move back into wave 1 price territory, and then a fifth wave down needs to move lower and would most likely move beyond the end of 3 to avoid a truncation. Elliott wave is fractal. This is a smaller fractal. Intermediate wave 1 is an impulse, and I'm expecting the next fractal up, primary wave A, would most likely subdivide as an impulse. When we have 5, 3, 5 down complete, then I'm going to have to consider alternate ideas for primary A, because A waves can subdivide as 3s or 5s. But for now, we need to see the first 5, 3, 5 down complete before I need to consider those alternates. And for now, the invalidation point remains back up here. I also have an alternate idea where I've moved this down 1 degree. It's possible that cycle wave 1 is incomplete and only primary wave 1 was over at the high, and this pullback is primary wave 2. All the subdivisions are the same. The Fibonacci retracement is the same, the invalidation point is the same, the expectation for the next direction to overall be down is the same. It's just the degree of labeling here, which is 1 degree lower. It makes no difference to the analysis now, but it could make a difference in coming months. And rather than just making a note of this in my text analysis for you, I wanted to show you what it looks like at the daily chart level. At the weekly chart level, another downward week with some increase in volume adds some confidence that we have at least a short-term high in place. Within a new trend for oil, price will not move in a straight line, and if this is the start of a new bull market for oil, then we should see a multi-week or even multi-month pullback relatively early on. And for this particular market, the first corrective move at the start of a new trend is usually really deep. So let's look for support next about 29 and below that about 19.2. ADX is increasing, telling us there is a downward trend in an early stage. ATR declining as price rises. There was weakness and upward movement. That's pretty normal for this market. On balance, volume has no new range and isn't giving us a signal at the weekly chart level this week. RSI is almost perfectly in neutral territory. It is perfectly in neutral territory, very close to the centre line. There's plenty of room for price to rise or fall. And stochastics only just coming down from overbought. Plenty of room for this pullback to continue. It's in its early stages. At the daily chart level, price has found some support this week, about 35. Next support below that, about 29, if it manages to close below support at 35. A deeper bounce here, look for resistance, again about 42. It looks like this was a selling climax. They're usually followed by some consolidation and then often the resumption of a trend. Selling climaxes, despite the name, are actually really occurring at the very end of the trend. They occur towards the end, but not at the end. They're usually followed by some consolidation and then a resumption of the trend. And we can see further selling climaxes as a trend continues, particularly for this market, particularly with its downwards trends. It can be quite strong. ADX indicates a downward trend. It's not yet extreme, so it's not above 45 and it's not above both directional lines. There's plenty of room for this new downward trend to continue. On balance, volume has broken below support, gave a strong bearish signal. No real new range yet to draw to look for the next breakout. RSI reached oversold as we saw that selling climax. It's just in neutral territory, but when this particular market has a strong downward trend, RSI can certainly reach more deeply oversold. It can remain there while price can move a reasonable distance. I would then look for bullish divergence between short-term lows after RSI reaches more deeply oversold before I would call a low in place. We are certainly not there yet. Stochastics is oversold, but this isn't particularly useful in a trending market. This is more useful in a consolidating market, which is not what we have right now. And MACD is bearish, supporting that downward trend. That's all from me this week with your oil analysis. I hope all our members are having a fabulous weekend.